it would not surprise me, not even a little bit, to see $10,000 gold before the end of 2026. I think we will. I like to be conservative in my written forecast because it's good to be right, and we all agree that gold is money good and it's easy to value based on global markets. So when people say when is the BRICS currency coming, I say it's already here. It's called gold. But I've said all along, if gold's going where I expect, and I've given a forecast to my readers in my newsletter, Strategic Intelligence, of $5,000 by the end of 26. I called my editor the other day and I said, we have to publish quickly because I'm going to hit that before we publish the forecast. But
I was going to say, are you going to move that forecast now?
Well, I probably will. I mean, candidly, it would not surprise me, not even a little bit, to see $10,000 gold before the end of 2026. I think we will. I like to be conservative in my written forecast because it's good to be right. But $5,000 is within reach. But $10,000 would just come as no surprise for gold. But
because
my point is,
always said, wait, sorry, Jim, I just want to give you kudos here.
Go ahead.
You've always said, since I've known you, once we hit $4,000 gold, you said sky's the limit.
That's right. And there's kind of like a fifth grade math issue here. It's not complicated, but so people think of the dollar price, $100 an ounce for $1,000 an ounce. And let's say you have 50 ounces and gold goes up $1,000 an ounce. Well, you just made $50,000. And if it goes up another $1,000 an ounce, you just made another $50,000. So that's true. But people get anchored on the $1,000 benchmark and making $50,000. But what they forget is that each $1,000 benchmark is easier than the one before because you're working off a higher base and it's a smaller percentage. And just to give a concrete example, when you go from $3,000 to $4,000 an ounce, that's a 33% gain. But when you go from $9,000 to $10,000 an ounce, that's only 11%. That's like a good week the way gold's been going.
Jim Rickards is making a critical point here. The jump from $9,000 to $10,000 is percentage-wise much smaller than the jump from $2,000 to $3,000. He is arguing that once the momentum shifts, hitting five figures won't take years, it could happen in weeks. If you want to stay ahead of this historic move, make sure to like and subscribe for daily updates.
So my point is, you're like, hey, it took a really long time to get from 3,000 to 4,000, which is true. But so therefore it's going to take forever to get to 10,000. That's not true because it'll make its way to 5 or 6, but it's going to go 7, 8, 9, 10 really quickly.
And if gold goes there, you wouldn't be surprised if silver went where?
So silver's along for the ride. You at that point you're looking at $200 an ounce. I mean that's not even a stretch. The people talk about the gold to silver ratio. You can calculate it. It's just a number. There is no fixed ratio. This goes back to some 19th century lobbying campaign by silver miners. People talk about 16 to 1. That was a political lobbying thing. There's nothing natural about it. Having said that, there's no way gold's going to where we're talking about $5,000 to $10,000 an ounce. The silver's not going to move also, which it will. So $200 silver would be in the same vein as gold going to $10,000 an ounce.
It just feels like to me, Jim, that silver is almost finally able to shine through and is showing its true price. Somehow it's broken free of its chains.
Yeah, I agree with that completely. Silver lags. I mean, gold will lead the way, but silver's along for the ride, but it does lag. But now the lag has caught up and silver's taken on a life of its own.
This is the breakout moment silver investors have been waiting for. For decades, silver lagged behind gold, but Rickards believes the paper silver manipulation is finally breaking. If gold hits $10,000, a $200 price tag for silver isn't just possible, it is inevitable.
Okay, I couldn't wait to bring up this talking point. I couldn't wait to have you on to talk about this. Obviously, I'm a little biased, but there's been a lot of drama in Italy lately, as I'm sure you know, Jim, with lawmakers from Giorgia Meloni's party pushing through an amendment declaring Bank of Italy's massive gold reserves, the third largest in the world, by the way, as belonging to the Italian people. To the Italian people, despite pushback from the ECB, massive pushback. What's really going on here? Is this a populist movement or a serious step toward greater national control over these reserves? I mean, hey, that gold would really help pay off Italy's debt, massive debt.
Well, I think you put your finger on both issues. Number one, it is a populist movement. Giorgia Meloni is a kind of right-wing populist, I would say more populist nationalist, but she's a very good politician, and she's kind of staying in bounds, not going, full MAGA, so to speak. But this is one that where definitely she's appealing to the populist vein. But you make a very important point. I mean, for example, who owns the U.S. gold? We have 8,133 tons. Who actually owns it? Well, the answer is the U.S. Treasury, although half of it's in Fort Knox and half of it's in West Point. So I always say the U.S. Army owns it because there are two Army forts. But the U.S. Treasury technically owns it, which is part of the executive branch. So it's kind of the people's gold. But when the central bank owns it, then you have to say, well, who controls the central bank? Who's really in charge of that? And they subordinate to the ECB. And all she's saying is, hey, it's Italy's gold. By the way, very fascinating comment. This goes back about 10 years, but it's out there. You can find it. Mario Draghi was the head of the ECB. But before that, he was head of the Bank of Italy, which is the central bank of Italy. And he was giving a speech at Harvard, and they were talking about gold. And somebody asked him a question, well, what about, you were head of the Bank of Italy. What about Italy's gold? And he said, I never sold 1 ounce of gold because I considered it a hedge against the dollar. Now, here's the head of the ECB, the head of the Bank of Italy, a full globalist. No one doubts Mario Draghi's credentials. But he said, I considered it a dollar hedge, and it is. So even the globalists understand it.
Yeah, I just think it's interesting. I mean, is Giorgia Meloni afraid that the ECB is going to say, oh, this gold belongs to all of us? I mean, is there a clear stake here that, what's Italy's is Italy's, what's France is France, what Germany's Germany's?
Yeah, well, first of all, it's consistent with something else that's going on, and I agree with you, Danielle. This is a tug of war between globalist institutions like the ECB and the people of Italy, basically. But there's something else going on at the same time in the same vein, which is one by one, these central banks in Europe. And by the way, people know about the ECB, but they forget that all these countries still have central banks. I mean, there is a central bank of the Netherlands, central bank of Italy, the Bundesbank in Germany, et cetera. Those institutions still exist. They have less of a monetary role, but they're still around. But one by one, these banks are calling up the Federal Reserve Bank of New York and asking for their gold back. A lot of that gold, not all the gold in the world, but a big portion of all the official gold in the world, about 20%, is in the Federal Reserve Bank of New York in a vault. There's about 6,000 metric tons there. Well, but you see Germany, Netherlands, Italy saying, hey, give us our gold back, number one. The Russians were smart. They kept it in Russia. They never put it in New York to begin with, of course. So there's a little bit of a run on the Fed when it comes to gold, number one. And then number two, when it gets home, back to Rome or The Hague or whatever, who owns it? And that's exactly what you're pointing at. But yeah, I think Meloni's going to prevail on this, but it is part of this nationalist wave that's going on.
Pay attention to this trend. It started with Germany, then the Netherlands, and now Italy. Nations are demanding their physical gold back from the Federal Reserve and the ECB. This is not just nationalism, it is a lack of trust in the global central banking system. They want their collateral back home before the crisis hits.
Right, and it works. It's appealing to the people, right? Belonging to the people. Okay, just staying on the topic of Europe, just one more point, because I know there's a lot of headlines going around our industry, Jim, about how Europe is finalizing preparations for a new gold standard. Now, personally, I think that the likelihood of the EU dismantling is greater than this. I don't see the EU countries working together towards a gold standard. Maybe I'm wrong, but have you heard anything about this?
No, and I don't think that's realistic. Look, if you want a gold standard, you need some gold. And these countries have a fair amount of gold. I mean, Germany, Italy, and France are kind of, second, third, and fourth on the list. U.S. is number one. China, officially, they say they have about 2,800 metric tons. There's good reason to believe they have a lot more than that, but no one knows quite how much.
Right.
But if you go by the official numbers, Italy, France, and Germany are like number 2, 3, and 4. And then
Yeah.
Russia's not far behind. So they have an enormous amount of gold, but they also have enormous money supply. So you need some ratio of gold to money to maintain a gold standard. It doesn't have to be 100%. The Austrian economists bang the table. It's got to be 100%. No, it doesn't. I mean, historically, 20 to 40% has been enough. The UK in the 19th century was about 20%. The US in the first half of the 20th century was about 40%. And then we bloated it to 25%. Now it's about 7 or 8%. I mean, it's relatively small. So you need a lot more gold to have a gold standard. So no, I don't see your other point, Danielle, about the EU possibly breaking up. That is definitely in the cards. I just returned
That's
from I was in Slovenia and Bosnia Herzegovina a few weeks ago, basically lecturing on gold and magonomics. But for the Slovenian audience, I was in Ljubljana, and they said, I said, what you should do, what I recommended to them, and their head of the central bank was there. There were some senior government officials. They said, quit the EU, quit NATO,
Yep.
go back to your own currency. Have a sort of a currency board, the kind of thing Steve Hanke recommends. He's an expert on that.
Really?
And and then have half your reserves in gold and half your reserves in dollars, and maintain a currency board. Because Slovenia, I mean, it's a tiny country with only about 2 million people, but they have a lot of natural resources. They have nuclear power. They're a transshipment point. They have a lot of things. Germany's committing economic suicide. France is not far behind. Germany, I bought a new German car not long ago, and I checked the specifications, and the car was made in Germany, but the engine was made in Hungary. And I'm like, well, that's okay. The Hungarians they're smart and they have good engineering and all that. But why on earth is a German auto manufacturer outsourcing the engine to Hungary? And the reason is the energy costs, because Hungary still gets natural gas from Russia. Germany blew up the Nord Stream pipeline, so they're relying on windmills. So they're basically destroying their own economy. But places like the Slovenia, I would put Italy in. Well, Italy's much richer, of course, but the point is they're better off without the EU.
No comment, but I would have to agree with that, Jim. Okay. This might be something that's more realistic then. And I want to get your thoughts on the BRICS just launching a pilot for the unit. It's a trade settlement instrument, reportedly 40% backed by physical gold and 60% by a basket of BRICS currencies built on blockchain to bypass the dollar. You've been warning about a BRICS gold link system for years. So how big a deal is this? How realistic is it? What's your take?
As far as I can tell, that the unit is it might be real, but it's not. It's not the BRICS. It's not official. I mean, some crypto promoter is behind it,
Yeah.
and maybe you can go buy one, but that's not the official BRICS currency. Now, what the BRICS are doing, they're not launching a BRICS currency, but they have built a BRICS payment system. That part is true. So the pipelines, the fiber optic and high-speed digital connections, settlement, clearance, message traffic, the SWIFT equivalent, they have built all of that, and they are rolling it out. They're basically leaving SWIFT and Fedwire and New York Clearinghouse. They're leaving all that behind. They're building their own systems. Now, these are communication systems. They're ledgers, settlement. It could be blockchain-based, but blockchain has been around since the 80s. That doesn't make it, crypto per se. So they built the infrastructure. Now, you can have bilateral trade between Russia and China. I mean, I think BRICS are now up to like 11 or 12 members, but there's a waiting list of 17 countries. They're growing pretty quickly. So you can have all this bilateral trade going on. So let's say Russia's buying manufactured goods and semiconductors from China. China's buying oil and natural gas from Russia. So Russia pays in yuan and China pays in rubles. And the central banks are building up these balances that do have to be settled up periodically. They don't have a common currency. So how do you do that settlement? I mean, Russia is going to be up to their eyeballs in yuan. If China keeps paying them in yuan, how much do you really need? The answer is they do have a common currency. It's gold. It's not the unit. It's not a new BRICS currency. It's gold. Because gold is, ironically, you can convert it into dollars, in real time. So let's say I owe you a bunch of rubles and you owe me a bunch of yuan. First of all, you can settle on a net basis, not a gross basis. So the net number is much smaller. You don't have to settle in real time. You can do it quarterly or twice a year, and you can settle it in gold. I'll just say, okay, Danielle, the balance is in your favor. Here's a certain amount of gold, done. And we all agree that gold is money good, and it's easy to value based on global markets. So when people say, when is the BRICS currency coming? I say it's already.
This is the ultimate revelation. Everyone is waiting for a new BRICS coin, but Rickards says the system is already live. They don't need a new currency. They are simply settling trade deficits in physical gold. This de-dollarization is happening right now, hidden in plain sight.
Here, it's called gold.
Well put. Jim, just wrapping, this is part of our Outlook series. So for listeners, stacking physical gold and physical silver right now, what's your top advice as we head into the new year?
Well, I would buy gold and silver. I have both. I recommend it to investors. And the question I hear a lot, Danielle, is like, "Hey Jim, you said to buy gold when it was 700 or 1200 or 1300.
Yeah.
I didn't do it. etc. I've missed the rally." And my answer is, you missed $3,000, but you have not missed the rally. It's going to 5 and then 10 sooner than people realize. It's not too late to get in, even if you're buying gold at 4,500, which is about where it is today. If it goes to 10,000, you still double your money, and it could go a lot higher than that. I don't have to sit here and make $20,000 forecast, but if you said, "Is that in sight?" Yeah. So yeah, you're a little late to the party, but the party is just getting going, and it's going to last a long time.
It just seems like yesterday I had you on when gold hit 3,000, Jim, and you said, I said, people are saying, "Hey, Danielle, my friends were calling me, should I get in? $3,000 gold, it's too expensive." And you said, you're going to wish gold was at 3,000 in a few
Right.
months from here. And you were absolutely right. Just wrapping here, Jim, I want to know what your plans are for Christmas. What happens in the Rickards household?
We're gonna be close to home. We live in New Hampshire, and I have a huge family. My wife's one of 8. I'm one of 6. So my kids have 34 first cousins. So we'll have some family around, and just kind of a quiet but joyful Christmas celebration. Looking forward to it.
Yeah. What does Christmas mean to you, Jim? For you?
Well, it's the birth of Jesus. It's Jesus' birthday, and he was, brought light to the world, and that light is still shining. And so I do tend to, we get caught up in the wrapping paper and the ribbons and the gift giving and all that, and that's fine. But let's not lose sight of the original meaning of it. It's when Jesus arrived in the world.
Well, Merry Christmas to you and your beautiful family. Thank you always. I appreciate you coming on this explosive and amazing day for gold and silver investors. A lot of happy people out there. But like you said, this is an important time to always let the light shine in. We still have plenty of darkness in the world. So it's always important to remember what really matters at the end of the day.